Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be talking about strategies, back in the saddle after a little bit of time off. So it's good to be back. It's always sort of a challenge to get back into the flow of what we do as active traders, especially after a vacation or at least having a few days out of the office. It takes a little bit to go with the flow. Best thing to do in that situation is to cut the leverage down, maybe not take as big a risk as you would want to take, but it was certainly a good break. So I'm glad to be back. Good to see everybody. Mark Corp, good to see you. Anna Macco, good to see you. Hello, how are you? Bobby Bob, always a pleasure, guys. Big day. I mean, that's the bottom line. Is we got a big day going right now. We're going to talk a little bit of strategies. We're going to talk a little bit about politics. It's politics time. It's election day, or not really election day, but our election day is coming up rapidly here in the United States. And what we've got going is a big time debate tonight. And a lot of the odds in the U.S. presidential election are changing. And you've got some real action here in WTI crude. And the big thing I've been watching in crude very, very closely is expectations for a Donald Trump victory are going to drive WTI crude oil prices down, whereas expectations for a Kamala Harris victory are going to drive prices up. Why? All about the Green New Deal, all about energy production, deregulation really of your energy industry as a whole versus extreme regulation. So this is really the market. This is the pick to click. It does not surprise me at all that we're seeing a big time sell-off here in WTI crude oil, especially when we're on the cusp of the election. So I want to thank everybody for joining us. It's sort of a big day here in How to Trade Land, our first trading competition, 5,000 to first, 3,000 to second, 2,000 to third. Alfredo, good to see you, Alfredo. We've got a lot really developing here with about a day left. Start date was August 12th. It feels like we've been down the road seemingly a lifetime. I'm confident that a lot of you have learned a lot if you haven't made a lot of money, but we're going to have more competitions. This is just the beginning. End date is September 11th. If you're in the United States, you probably remember September 11th as being a big day in a lot of different ways back in 2001. But September 11th, 2024 is going to be the end date. This is when we're ending our contest. That's tomorrow. So we're getting right down to the nitty gritty. The $5,000 is definitely up. All of 2017 has run this competition pretty much the entire time. Has been on top of the leaderboard. But take a look at how things tighten up as we get closer to D-Day, as other traders start really forcing the pace and attempting to get in on that leaderboard. I mean, there it is right there. 46,000 to 32. This is closed up considerably. So I'm concerned. I'm not concerned, but I'm interested to see how this last 24 hours goes, at least with regards to our leaderboard. You see Mail2. Mail2's been 40,000 trades. That's a high-frequency trader hanging on right there. We've also got Jonas there at 16,000%. So there's a lot going on here, guys. Really a lot still in play for this last 24 hours, or maybe the last 12 hours, probably till midnight tonight or through midnight tomorrow. So just keep trading until you get turned off. That's all I could say. Go hard, go hard, go hard, go hard. That's what you got to do if you want to win, really, in anything. Right now, though, it's Olive. Olive's been on top for the entire time. I just got a private message from Olive, so I will certainly answer that towards the end of right when I'm done here. Economic calendar today, not much. Absolutely not much going on. I mean, we sort of just are looking through the key events here. I don't see anything that's really going to move the markets. In NFIB, business optimism is not going to do a darn thing. OPEC monthly market report. A lot of people that think that this moves the markets, the crude oil market. It doesn't. You see a little bit of action, but I have to be real honest with you. That OPEC market monthly report doesn't do much. We're looking at the weeklies really to determine where U.S. supply stands, and that's pretty much our big market move of the EIA. Down through here, BOC Governor Macklin's speech. We're going to take a look at your dollar CAD today. One reason why is because WTI crude's on the move as well. But other than that, not much going on really. Not much going on here. Now, tomorrow it's going to be a lot different. Get ready. It's going to be a red letter day for tomorrow, Wednesday, September 11th. What do we have? We're going to have U.S. CPI, and that's going to be huge. I'll be watching mortgage applications closely during the pre-market. That's a big-time release. But for me, I'm looking at CPI. CPI is the big one. We're looking for a little bit of a slowdown in what we think is going to be an aggressive Fed rate cut, and there's a lot hinging on tomorrow's CPI numbers. If it comes in hot, we're gonna start really questioning whether the Fed's going to cut a half point next week or not. And if it comes in lax, and you do see sort of an improving CPI type of an environment, then we'll be in a position perhaps maybe to where we'll only see maybe a maybe a quarter point. It's just really tough. It's really tough to say, guys. But this is your key event, 6:30 my time, 8:30 a.m. Eastern. Consumer Price Index, except for food and energy, that's core. And then regular consumer price. I am skeptical. I think these numbers are going to come in hotter than expected, but that is an absolute big one. So let's get back out to price action here. WTI crude has been the market for me today, and I've been watching it relatively closely. I sort of took a bid, a little bit of a bid here from right above 66. It was a pretty good bid. My trade execution was not as good as it needed to be. A lot of that's because I've been out of the saddle and I'm not really back in the rhythm. It takes time. Remember, trading is a marathon, not a sprint. So that's one reason why you don't bet the ranch right when you're coming back off of a break or something. But this is a classic. I mean, this really is a classic trend day down. Boom, there's your big time sell-off. There's compression. Then we extend further. What are we doing right now? Well, if you do take a look at what's happening, we're just sort of compressed right around 65.50. Do you think we get a late day buyback? I would say more than likely. I think you're going to get an opportunity potentially to sell this market. I would go focus right on that U.S. session. Spike high right there, right up there, right around 9 a.m. Eastern. That's when the traditional pit open is. Big sell-off. Then we go right down to the bottom. This pullback right from around 66.58 I think is going to be a great sell. It's about 90 cents north of where we're at now. Still, though, I think we get it. I think we get a chance here. Look for big action to enter the market in the next hour and a half, 90 minutes for WTI crude oil, and I definitely will be looking to sell this thing. Now, that's a pretty darn good entry, 66.50-ish to the short. What about the macro zone? Well, I've been talking a lot about, what to really believe, what not to believe, and what to believe out of WTI crude. There's a lot of people that believe that we're now entering the next bear market of WTI. Now, we really could be. There's a couple of reasons why a big-time sell-off here is possible, all right? But I'm going to show you right now how to avoid one trap, and it's something that a lot of people are getting sucked into, at least with support zones right now. A couple of things that I'll point out. Number one, the fundamentals facing WTI crude oil for this time of year, essentially they're bearish, meaning we're going into wintertime seasonality. You're going to see things, more sellers into the market. Bullish summertime. So spring, great time to bid crude oil. Fall, autumn is a great time to sell crude oil. Late summer. Let's see, Victor Aberdola. How would you trade the U.S. dollar, Japanese yen according to possible CPI results? Great question, Victor. We're going to cover up the dollar yen here in just a second. I got it right on my list right here. But in any case, WTI crude. If you're looking at levels, spike low, 63.61. Definitely keep an eye on that. May 2023's lows. We're definitely looking at checking that out. Now, just basic Fibonacci retracements. I have seen this sequence put out there from others in the online space, other traders. And I really want to point this out. This is from the crash lows of April 2020 to these sort of euphoric highs of March of 2022. And they've really been focusing on this range as being important. And I don't disagree for a long-term range. The problem is those Fibonacci's are wrong. They're incorrect. That assumes that crude oil was priced at 1 cent or 0.00. Remember, that's not what crude oil was worth back then. April of 2020, what was it worth? It was worth about negative $40 a barrel, depending on your broker. This right here, this chart, has lost a lot of people a lot of money. So now they're looking at, it's about a 50% retracement of that range. That simply isn't true. If you're going to use something like a Fibonacci retracement, or even really any technical indicator that's going to be using a monthly chart, you have to understand where to begin your lower extreme, and it's got to be down there right around negative 38, somewhere down in there, 38 to 40. Now, if you miss that, that's a big miss. Look where we are now. We're right around that 38% zone that I've been licking my chops to buy. 65.53, big time zone. 65 even, big time level. I would definitely have an eye on this double bottom, this monthly double bottom back from March of 2023, 64.41. And then you're also your low right there, 63.61. That area right down in there. If we see a little bit of a maybe pricing exhaustion from this month's sell-off, which we're off about 11%, if we get a little bit of exhaustion here, there's going to be institutions stepping up and buying the market, especially if the election odds sort of sway back towards Harris. And we're going to talk election here in a second. One last thing. Well, let's just cover it right now. Victor had a question about the dollar yen monthly chart. I always look at my monthlies first. I work long to short multiple time frames, monthly, weekly, daily, intraday. That's what I do. And the reason why is I need to outline exactly what's happening in the market. I want to know the market state, number one, and I want to know where my key levels are, number two. And right there, you can see you have a really nice, I call that a monthly double bottom, but we could say that that's sort of a spike low back in December of 2023. The other thing that you could look at here is potentially what's 2024's lows? It's going to be January's low. January of this year, I know it seems like a long time ago. Low right there is about 140.98. I'm a bidder from there. I'm a bidder from right around 141. I would be looking at 141 even as being a very, very strong bidding opportunity. Your low right there was about 141.68. I'm a bidder down there. I'm looking to buy the market from that zone. I'm not looking to sell unless if we take that area out. Then we can sell and we can jump on that long-term trend and maybe get into a big time, essentially what it would be is a long-term trade going into Q4 of 2024. I think that's a pretty good trade. But if we don't take out the yearly lows and we can't get established underneath 141, then I'm not even interested in that. That being said, what do I want to do on short time frames right now? I'm not interested in fighting trends. I hate fighting trends. It's how everybody loses money. It's the number one way that traders and investors lose everything they have, houses, cars, marriages, whatever, airplanes, hedge funds, whatever, is they try to fight trends. And I was listening to a guy this morning that has made an absolute fortune in the real estate market down in Florida. I was just down there, and I was listening to him, and he was talking about being absolutely cleaned out back in 2008 to 12. Why? Because he was trying to fight a trend. They were trying to invest into a trend that just wouldn't let them out. Trading's the same way. You can't fight trends. Today, I took a long on WTI crude. I knew it was against the trend, but I was smart enough to get out. Since I got out, that market's traded down about another $1.50. So we have to be able to get out of these markets, but we also have to understand what market state's doing. Monthly trend, you got a 3-month a sell-off. I'm looking basically to join that, but how can I do it? Well, here's a weekly. Okay, we've got a weekly. Boom, nice big sell-off, compression, break. Okay, last week, a big negative week. Let's take a look at our daily. What do we got on our daily? We have all sorts of opportunities here to sell, at least the way that I see it. This is exactly what I would be looking to do right there. You've got a nice spike high. So this is how I would be trading the dollar-yen, Victor, going into CPI tomorrow. Take a look at what you have here. Huge level, key level at 143.84. What exactly would I be looking to do there? Well, you've sort of already got the shorts a couple of times. I'd be shorting again. I would be short from 143.84-ish, 80-ish. I think that's a pretty darn good trade. Would I be a buyer down here? No. I would wait for that CPI number to maybe give me a shot at 141 even or 140.82, and I'm a bidder down there. Long term, I still don't like the yen. I haven't liked the yen in years. Now it's making a bit of a surge now because we're going to see those rate cuts out of the Fed. The Fed's going to start cutting interest rates next week. We'll talk more about that as the week progresses. But still, right now, my key numbers to the top side, I'm not above selling 143.84s, 80s in the short term. But I think a better level, I would much rather be buying 141s down there, something like that, after a big time CPI release that's going to send this market absolutely haywire. That's exactly what I want to do. So that's what I would say, Victor. I hope that really squares away what I want to do there with the yen. As far as market state, you'll notice on the daily, what do you have? You have rotation. This market's absolutely flat. Why is it flat? CPI is coming out tomorrow, and you'll remember that that is one of our biggest market movers. I would say Fed releases are number one, CPI number two. You're welcome, Victor. CPI is number two, and then as far as number three goes, is probably going to be anything to do with your international central banks. And boy, as far as economic events goes, those really are the market movers, guys. CPI, Fed releases, things like that. So really a big time news cycle coming our way in the next 7 days. I can't wait to trade it. But let's talk about what's coming our way right now in the next few hours. This is big. This is absolutely big. The U.S. presidential election. I've sort of promised more coverage about this. And the reason why is because it's absolutely critical that we understand what the election can do to the markets, not just the markets in general, but what they could do to, say, the U.S. dollar, say the commodity markets. Let's see, Alfredo, Shane, please, can you see the gold? Yeah, we're going to look at gold right after we do a little bit of election stuff here. But the number one thing that I would say about this election is it's a coin flip. Nobody knows how it's going to go. And we're going to talk about why right now. Let's take a look at some betting odds first. I'm a big believer that people that voice their opinions with their wallets are fairly well informed. They're a little bit better informed than somebody that's just, say, a Republican homer or a Democrat homer, or even the people on television, the talking heads, which, most of them know next to nothing about politics and how politics are going to impact the markets. They just don't. And a lot of them have agendas too. I'm going to sit here and be very honest with you. I like low taxes and free markets. That's what I like, period. I like low taxes and free markets, and I know which candidate's going to bring that. Now, what does that mean to the markets as a whole? Well, deregulation, low taxes, things that are going to bring business in are probably going to force your stocks up. Risk assets are probably going to go up. Something like a crude oil that's looking at deregulation. Maybe we're going to drill, something like that. You're going to see more crude oil on the market, especially if we unmothball, something like the Keystone Pipeline. You're going to see a lot more of that energy hit the markets. That's going to be, say, a bearish market driver for crude oil. Now, on the flip side of that coin, on the other side, if you're going to go into the Green New Deal and go green energy, then we're going to see major upticks in really stocks that are industry specific. You're going to see major upticks in green energy firms. You're going to see electric car providers probably going to get a big time bump. You're going to see maybe chip makers that have to provide all this technology that a lot of the green energy is going to really be based on. You're going to see a lot of those companies get bumps too. But as far as your aggregate markets, will they go higher? Maybe. It's not out of the realm of possibilities. Maybe. But as far as energies and commodities go, what does that do? Well, we know that U.S. oil will go up under a Harris victory. U.S. oil will go up. There's no doubt about it. Where will it go? Who knows? But as far as gold, something like gold, we're going to look at that next. I think that gold I think it's going to be in a holding pattern. I expect to see a little bit of selling in gold, especially right after the election. When that political uncertainty is finally settled, you're going to see gold sort of stagnate. Now, if we see mass chaos and social unrest and a lot of things that a lot of people believe, then you're going to see gold go way up. That's definitely what you're going to want to look at this. Let me see. What do I think about this? If Trump wins the debate, the USD will go bullish. I don't know. I don't think the debate's going to have much of an impact on the U.S. dollar. I think it's going to be more about commodities and stocks. Now, how do you win a debate? Hard to say, but that last debate, ended Biden's career. So everybody's watching tonight, guys. The markets are watching. No doubt about it. The markets are watching. In any case, you can see right here, the bettors say it's 50-50, 52-52. This is predictit.net. This is a good, sort of a decent website that gives you a proxy of where the bettors believe the action is. If you take a look at Polymarket, Polymarket's got Donald Trump with a significant edge, about 53% to 45%. And you'll notice that these are big markets. 126 million has been bet there. Harris, 111 million. So there's a lot. These markets are much bigger than Predictits. They suggest that Trump has a slight edge. I don't know about that. If you do look at your Real Clear Politics electoral college map, you'll notice that we're going to get into the battlegrounds here in a second, but Trump, Vance have about 219 electors. Remember, in the United States, the electoral college elects the president. The voters tell the electors who to vote for, and then the electors go to the big convention. Not the convention, but they certify with the Congress in January. We'll be covering more of that, I guarantee it. In any case, 219 for Vance right now, 208 for Walz. About 111 electors are in a toss-up mode. And right here's what your map looks like. Anything that's gray, you'll notice is sort of what they would call a toss-up. That means the polling data is largely. I think all polling data is skewed. They just do. We've seen Trump outperform polls in the last two elections by about an average of 5%. So I wouldn't get into the polls. What I want to talk about is really the way forward for each candidate, and it's relatively simple. If Harris wins, say, has a strong edge in Michigan, that I would be surprised if that's really a toss-up. But let's say you win Michigan and Pennsylvania, that's going to be tough for Trump to overcome. Trump, on the other hand, has to win Georgia, has to win North Carolina, and those things, and maybe steal a Pennsylvania or a Michigan, and then we'll start talking about Arizona and Nevada. It's very, very close. I would think that a slight edge is probably the way that these states fall. I would say a slight edge is probably going to go to the Democratic candidate just because of the history there in Pennsylvania and Michigan. But who knows? Who knows? Right now, this thing is an absolute crapshoot. So what happens to, say, something like gold after our election is completed? And, well, there's a lot of different scenarios. I just gave you a couple. Number one, I think just the election being over is going to really bring an end to some of that uncertainty, and I think that may drive gold off of this $2,500 pivot. I could see that. I could also see gold going a lot higher. There's a lot of pundits out there. There's a lot of people and speculators that believe that you're going to see periods of civil unrest in the United States that we've never seen. And that may, in fact, develop after the election. I am one of those people that believes anything can happen. Absolutely anything can happen. And remember, if you see something like that, then gold's going to absolutely skyrocket. So I know I'm bailing out on the question saying, okay, what do I do? Do I want to hold gold or do I want to short gold? I've been on the bullish train for gold pretty much all year long, but now we're starting to get into, I won't say it's the end days, but we're getting near a time when all that uncertainty is likely to dissipate or really spike. I don't think gold goes anywhere from 2,500 ahead of the election. I don't think we rally way above 2,500, and I don't think we fall off from 2,500. That's what we call an area of fair value, and it's real important to understand this stuff when you're looking at when you're looking at markets. If you are a market profile trader, they would call that the point of control. That means the market is just pivoting around this key number. Very important to understand these things, especially on intraday basis. Maybe I'll pull a market profile chart up. I don't really know. Those things are really difficult to read, but maybe we'll make a video or something so you guys have a tutorial. In any case, that's the point of control. There's no arguing that for the past, 4 weeks, we have not been able to really shake 2,500. So if 2,500 even is pretty much the belt buckle or the belt of the market, we can't go really north or south of that by any real measure. I would still be buying dips. So tomorrow's CPI number, if we get a big sell-off, I'm buying 38%. I said that last week. I said if you get a chance to buy down there from 24.75ish, you probably should do it. 24.71, it was a great trade. You're up $40 or whatever. For right this minute, still have a bullish bias. My technicals tell me that this is a bullish market. Everybody's pretty much on the long side of gold, which is fantastic. That's great. How do we trade it right now today? A couple of things. The debate will send bidders to gold, or buyers and sellers to gold. It will do that. No question about it. It did last time. We saw big-time action after the debate on the gold markets and the equities markets. We're going to look at equities in a second. So for me right now, how would I be looking to trade this for the rest of the day? I see it as a very slow day, small range. I wouldn't really hate selling maybe this double top up here if you get a chance, 25, 29-ish. I think you could sell in there and just play rotation for right this minute. You could definitely buy the pullback down there. I'm all in for that. But if we're looking at our daily and saying, okay, what do we have here? Well, we know that the top of this market typically is where? Right. I mean, look at all these tops right here. High, 25.29. What's your high right there? High, 25.28.74. What's your high right there? 25.26. How about this spike high right there? 25.29. You got to be a seller up there. I'm a seller up there until proven otherwise. You'll notice right there, there's your all-time high at 25.31. I mean, the sellers have been there. I would be looking to do the same thing. I'd be a net seller probably from 25, probably 25.26 right up through 31. I think that's a pretty good area to sell, really target that. You do have, I mean, I won't call it a double top or a triple top, but it's definitely pronounced. If you go to a weekly, it doesn't get any better than that. You want a triple top? There's top one, top two, top three. So the idea here is you're a seller up there until the price breaks, and then we're going to be looking to buy pullbacks on a daily chart or a 4-hour chart. So if I'm going to go intraday right now, how would I trade this? Let's go to a 4-hour chart. Take a look at the first 2 days of the week. Nothing. A little bit of selling right there on Friday. Well, a lot of bit of selling. What do you have here? Sort of a weekly open, and then we just sort of grind in north. Do I want to commit to the long side of this market? No, our trade location's not very good. I wouldn't buy right now. I would wait. I would be looking to sell that zone right up there we just covered. 25. 25, 26, all the way up to 30. I think you could be a seller there. If I had to pick a great location, or my favorite location would be 25, probably 25, 27.50 would be my sell. Take that right up there. Look to make $5 or $6. Stop loss, though, would be relatively tight above that all-time high, probably up there around 32.50. Just because what I don't want to do, and I have to avoid it at all costs, is if in fact this market breaks and it breaks high, I can't be holding shorts. It won't work. So what do I have to do? I have to make sure that I'm out. So if the market breaks above this level, I got to get out. But if in fact we do get that big trajectory, where's my highlighter at? If we do get that big break, I want to be in a position to buy pullbacks. So as soon as we break above that all-time high, I want to start looking long on the 4-hour chart. Right now, it's just not that time to do so. So I would be definitely waiting. I wouldn't be in any hurry to join this fray. We're going to have a big-time market. We're going to have a lot. The markets are going to be on fire, I think, starting at the debate tonight all the way through CPI tomorrow. And a lot of it has to do with this map right here. I can look at polling numbers all night long. It doesn't do us any good. These polls are typically wrong, but you can see that Trump's ahead in a lot of these states. These states right here, I mean, these were never battlegrounds. Something like a Minnesota, all of a sudden Minnesota's up. Virginia, that's fascinating. So when we look at these polls, throw them away. Throw them away. They don't mean anything, but this market will, and you're gonna see a gold market that's absolutely on fire. So. If you guys have any other markets you want me to look at, be sure to drop them in. I'm more than happy to sort of show you a few things that I'm looking at. This one's fascinating to me. We got a weekly chart on the Euro USD. This was good stuff right here. I had this area outlined, this 110.39 zone, which is a nice 38% spike low, spike high, about 38% pullback. And if you do look at something like this, what did you have? This thing of beauty right there. I mean, that right there is a winner. That's a bounce. That's a sweet bounce. But now that level's gone. And when these levels give way, it's sort of what I say. It's like somebody's knocking at the door. Think of a support or resistance level, a horizontal support or resistance level. It's like somebody's knocking at the door. Eventually, those things give way. They're not effective anymore. And once they lose their efficacy or their effectiveness, then the market just doesn't move a little bit. It moves a lot. Why? Because the selling in this case is sustained. This is the U.S. dollar getting a little bit of its puff back against the euro. Does it last? Doesn't it last? CPI will tell the tale. But for me, I don't trade 50%. It's not my thing. We already got a couple real good trades right there from 38%. I'm looking at the back end of my golden zone, which we just put the golden zone video out on YouTube. Be sure to check it out on our How to Trade YouTube channel. Pretty good video, not too bad. Go get in there and check it out. We give you some strategies on how to trade this golden zone, which is the area between 50% and 62%. And I'm looking right down there about 109.50. I would love to trade pretty much just the center of that golden zone to the long side on a CPI number. I think that would be a pretty darn good level. It's be something that we could definitely be doing. Let me see. Alfredo, absolutely. You're absolutely welcome. I could talk about gold all day. There's so much that goes into a gold trade. But just from a technical standpoint, I'm a seller up there near those all-time highs. I don't think that we're going that much higher yet. That's not to say we couldn't. Let me see. Last question, I promise. Great Britain Pound USD also have some news tomorrow. Yeah. Let's go ahead and take a look at that. I love this one though. Those would be my target too. The Euro USD and dollar yen we already went through. But this right down in here, right in the middle of that golden zone, say for my 13 week moving average. 109.65 right down to 109.50. Probably going to be pretty good entries to the bull. I would be real surprised if this pair takes out our golden zone. I think that's a pretty darn good one. Hurst Horns getting involved. Trump 2024. Seems like everybody's got their favorites. I saw a lot of Trump flags down in Florida. I'll tell you that. There was right down in that Tampa Bay, that Tampa St. Petersburg area. Beautiful beaches down there, North Reddington Beach, Madeira Beach. Had an absolutely great time. You guys, if you're from that region, you have the best shrimp in the world. I mean, that Gulfport shrimp, boy, I'll tell you what, I'm up about 6 pounds. I'm going to have to get in shape, maybe hit the gym, get back in the gym later today because that stuff's absolutely fantastic. All right, let's take a look at this pound dollar. Let's go right here weekly. I mean, it's going to look really, really similar, guys, to what we just looked at in that Euro USD right there. Spike low, spike high, something like that. Just that's the basics of how I would look at it. Fibonacci retracements, those are my bread and butter. If you haven't seen any of the videos, check out our trading room. Go into the Elite Trading Series. Check out the Counterpunch videos, and I sort of show you what I like to do there. These are real simple reads for me. As long as we're above 38%, the bullish trend is still intact. That would be a key level I would have. 130.36 would be on my map. I would make sure that it's on my map there. 62%, 128.94, maybe 129-ish. I would love to buy 129s. That's a much safer play, especially with CPI coming out. That's a much safer play than saying getting involved right here in 130.36. Why? Because that release is going to bring an absolute ton of participation to the markets. I want to be a bidder there. I definitely would bid, but I wouldn't get married to it. I would be out underneath 130. You'd have to get out there, and if you don't want to take that trade, you definitely, that 62% right in that golden zone somewhere. I'd be looking at probably 128.09s as being a fantastic bid. But right now we're printing about 130.70, so secondary entry would be somewhere right up in here to be very aggressive. Now the real question is, do we want to sell this thing? I'm not in a real big hurry to sell it. Really not. I mean, you could sort of, we have several strategies. I won't get into those now. We're going to do some strategy work later today. I want to talk politics because that's really what's driving the markets right now. But, we've got a W strategy. Maybe this would be a great time to take a long on a 4-hour chart, Great Britain pound USD. We just got we got the CPI number is going to absolutely crush us. It's not going to crush us. We're going to make money on it. But what it's going to do is it's going to shake these markets up. So those are my key levels for the Great Britain pound USD. All right, let's take a look at one more. I've sort of been running my mouth on absolute a lot. If you're in the United States, I'm a futures trader. That's my bread and butter. That's what I do. Today, this is sort of what my charts look like. A lot of lines in there, a lot of confusion. Don't worry, don't be confused. It's not, believe me, everything on my charts means something to me, just as everything on your charts means something to you. And I don't care if you have one line or 50 lines on your chart. If you understand each one and what they mean, then you trade them. And as long as it makes sense to you, that's it. For me, you saw, really, it just looks like hieroglyphics. I mean, who knows? But it all means something to me. So right now I would absolutely love to sell these E-minis right up here. That'll be probably my last trade of the day if we're fortunate enough to get it. I would love to sell right up there, right around 54.99, right around that. Why? Because that's a key 38% level for me. And I go down my daily chart. I mean, I would be surprised if we break higher than that, especially with this debate coming tonight. But that's going to be my late day sell, and that's what I'm watching relatively closely. Do we get it? Don't we get it? That I don't know, but we're definitely cruising back up there. Should be interesting. One thing that I did want to say, it's getting time. I mentioned a lot this year about selling. Let's go to the US 500. It's a cleaner chart. Really selling the S&P 500 and taking a position in it, and I think we're just about there. I've really avoided making a long call on what we could sort of expect here. When you got something that's trading at all-time highs and you have huge uncertainty on the horizon with a U.S. election and potentially all these market drivers, the idea is it's not a bad time to take a position. For me, I've sort of been calling out, hey, it's time to really start looking at the short side of the U.S. stock market for a longer-term correction, and I think we're pretty much there. Do I want to sell it right here? Not yet. You wait for a deeper retracement, maybe up into here, something like a 56, but we could definitely build a case that this market's very toppy, and it's time to short it. Last week was an absolute clinic. I mean, it dropped 4%, and I thought, well, I go on vacation, the market finally crashes. I've been calling for that crash for 6 months, but I don't believe that we're going much higher. If we do, we may wash that all-time high out by just a few and then rotate back down to the downside, but I think that we're headed much, much lower in the next 18 months. I think that, Connor's made a great point about, the biggest sell-offs in U.S. stock market history have come after you get the big, you start getting the rate cuts. So when the Fed starts cutting rates to support the stocks, then you begin to see a major correction and a sell-off and recessions and all that. So I think we're on the cusp of that, and we're going to get the rate cuts next week. We're going to talk more about that tomorrow after CPI. But when you do look at this market and you say, wow, is it toppy? Take a look at what we're looking at really since COVID. There's your COVID craziness. I know some folks that bought big down there right in here. They did very well. Is it time to maybe get a retracement? The idea that we couldn't get a big-time retracement maybe down into here. We almost already got one last month. Could we go lower? Could we go down in here somewhere? Yeah, you really could. Is that going to happen overnight? No, it's going to take some time. But if we get into a situation where there's civil unrest or escalations of global conflict or wars, then you could definitely get that pullback. What happens when all that COVID money's finally out of the system? It's working its way out, but you can see what happened when we flooded it with unlimited funds. What happened? The markets went to the moon. Can we trade this? Yeah, how would we trade it? We probably would be using options, probably buying put options in the money puts, looking to maybe have an opportunity to have a chance at getting something really good going. Sort of having the opportunity to sell near this area upon exercising, and those are complex strategies, but we'll talk about them. We'll get into it. We'll talk about them. Let me see. Hurst Horns, do you not scalp? That's all I do is scalp Hurst. Right here. I mean, this is exactly what I would do. So going back to this, I get this question a lot. They go, Shane, you talk about monthly charts and all this jazz. I'm not an investor. I'm a trader. I'm a scalper. I was in my WTI crude oil trade about 15 seconds this morning. It didn't turn out good either. But this right here, to answer your question, Hurst, 30-minute chart. My line in the sands right there, it's going to be my daily Fibonacci retracement level. And then I'm going to go, how am I going to manage this trade? I'm going to go right down to a 1-minute chart, and that's what I'm going to be looking for. I'm going to be looking for a test of my zone, and I'm going to want to see immediate confirmation, meaning I would love to see a hammer. Inverted hammer, boom, or hanging man, something like that would be great. But I would be managing my trades on a 1-minute chart. Why? Because I don't have the money to sit around and make an investment call like Warren Buffett. We don't have hundreds of millions or billions. That's for sure. That's for sure. Most of us are trading with probably an estimate, a good estimate. Most ladies and gentlemen in the room probably have a few thousand in an account or a few thousand in a prop account. Most professional traders, you probably see them show up with, I would say, no less than 25 grand. That's pretty much bargain basement, and it goes in a hurry if you're not winning. All right, one more question, then I'm going to go ahead and sign off till tomorrow. Let's see, Mark Corp. I have been looking at options very recently. Very interesting. Would you do a session on them one day? I'm full disclosure, Mark. I'm not an options specialist. I'm not. I have done a tremendous amount of work on spreads, options spreads, different spread strategies for commodities. What I will say is my option strategy would be very basic. Back during the COVID, going into the COVID year, the idea was just to do a straddle, which is a basic straddle where you're buying puts and buying calls from essentially the same strike price, and you're looking for the thing to move. That's it. And you're only out the premiums. That's what makes that attractive. So when I would be looking at, say, something like US 500, maybe take an S&P 500. Well, let's just get the S&Ps up. Let's say that I wanted to get, there it is, natural resistance right there. If in fact, that's exactly what's happening there. Spot on. If in fact we were going to take an options play, you would want to be looking to maybe go, to the short side of the market from somewhere right up there around all-time highs, with the idea being that you're going to pay a big premium for that because those are going to be in the money. If you're going to get out of the money options, the premiums are going to be a lot cheaper because the probability of them going past that price or either way is nil. Some of the most sophisticated people in the world are options traders, especially options market makers. They know exactly how to price. They have all sorts of automated tools they use to price options contracts. Don't think that you can just go beat options pricing people. They're as sharp as it comes. They're as sharp as it comes. But if we have a broader look at the market, it's a way for me to go in there with, say, maybe $15,000 or $20,000 and make a trade and look to maybe stack up a lot of chips. That's a lot of those trades. That's why people go to options. They're like, well, what if I secure the opportunity to sell up here? I risk 10,000. That's all I'm out's the premium. And I have a contract in my hand that says, well, if this thing crashes down here to 4,900 and I can still sell it up at 56, I'm potentially rolled my initial investment over big. And that's what makes trades like that attractive. But yeah, I'm a scalper. So when I look to grab 5 or 10 ticks on a trade, that's my bread and butter. But trades like this, they don't come around very often. And I'm curious to see if we get another chance. I don't know. Iron butterfly. Oh man, the butterflies, the iron butterflies, the bull calls, the bear calls, all of it. The spreads get really, really serious. Strangles, that's another big one. Strangle strategy, where you're going with puts and calls, and you're trying to make sure that if a market doesn't move, you get paid on both. That's a pretty good strategy as well. So something to think about there. All right, guys. We'll talk options down the stretch. If we actually do pull the trigger on that trade, which it's getting to be time, then we'll talk about the structure of it and exactly what's in play and what could possibly work. Other than that, we're going to be scalping and doing some day trading here. All right, everybody. I want to thank you for joining me again. I want to thank everybody for joining us on the live chat. Remember, no matter what platform you're watching these streams on, chime in with some questions. We'll do some Q&A sessions. I know Connor did a Q&A that was very well received. I'm more than happy to sit here and answer any questions that you have. A couple things about my streams. 2 rules. Number 1, if it makes money, it's the right answer. Number 2, I'm not going to BS you. If I don't know, I'm not going to tell you. That's all there is to it. All right, Bobby Bob, thank you. It's good to be back in the saddle. Ran a little long today, but that's all right. That's all right. It's good to get back and start getting in the flow. Tomorrow's a big day. Debate tonight. Look for action in those futures markets during the overnight. And then tomorrow we've got CPI dropping. That's going to be a big deal as well. All right, everybody. I want to thank you for joining me. If you sent me a private message, have some patience. I'm going to get back to you as best I can. I do have a stack of them, though. And if you received a reply while I was out on vacation, if you received a reply, then just send me your question again. That'll sort of save me time for having to go down through the list and maybe double replying to the same answer or same questions. All right, that's it. Trade the action well, and we'll talk soon. See you.